And for more on this story, let's bring in Alfred Schipke. He's a director of the East Asian Institute at the National University of Singapore. He's also the former International Monetary Fund's mission chief for China. Alfred, good to speak to you about this. We've seen a positive reaction from markets in Asia, but how will China be reacting to this? Not necessarily their markets, but just their leadership in general, given that they're now seeing 125% tariff staring at them.
Well, I think China is, of course, in a very, very difficult position because of the announcement by Trump that gives a reprieve to every country except China. But I think at the same time, what you hear coming out of the White House, and if you look at the white paper that China circulated yesterday before it matched the 50% in tariffs, it also articulates that it is looking forward to negotiations and ultimately a deal. But of course, in the short term, the pain would be felt mostly by China.
And you've just returned from Beijing, I understand. What are you hearing from policymakers and academics there?
Well, I think two things. On the one hand, there are a lot of people willing and encouraging, China to move forward in finding an agreement. But there are also a lot of those who say, China needs to stand up. It's a proud country. And one group articulates, and I think that's one of the challenges, that the channels of communication between the two countries are not perfect, to put it nicely. And that China and the U.S. might operate differently. In the Chinese system, you first have discussion at lower levels, and then you bring it up to the top. And those channels, I think, are currently clogged.
Yeah, that's not the way that President Trump seems to like to do things either. He likes to sort of govern that sort of process from the top. China's leaders, though, do they think they can win this trade war with the United States? And what leverage do they have when it comes to negotiations, if that is what's going to happen with Trump saying that he's waiting for China to come to the table?
Well, I think the pain will be large for China in terms of the economy. But ultimately, American consumers, if the tariffs were to remain, will also pay a high price. Inflation is likely to go up. Some of the companies we have already heard might lay off workers. So at the end of the day, I think it's the markets, equity and bond markets on the one hand, and ultimately the American consumer that might encourage an agreement from the U.S. side. And I think to some degree, China is betting on that as well.
And how would you assess China's economic strength at the moment? Can they handle a trade war with the United States?
Well, China's economy was recovering and was on a stabilizing path. Of course, this is going to be a big hit if the tariffs are sustained. But at the same time, the government has already articulated that it is willing to deploy all tools possible to support the economy and stabilize the economy. And while debt levels are not as low as they were in the past, China's balance sheet is still very, very strong. So it has the ability to stabilize markets.
And Alfred, just quickly, what should we be looking out for next to see which way this is going to go?
I think on the one hand, to see whether as a result of maybe now also the announcements coming out of the White House, there is a lower level, an effort on both sides to find a solution. Ultimately, I think when it comes to equity market, bond markets, uncertainty will remain very, very high. I mean, you earlier mentioned the 90 days, 75 countries that want to negotiate with the United States. It's going to be a backlog. And so we're going to see a lot of volatility coming through the markets. In this process, I think an understanding with China and the U.S. could be stabilizing.
Alfred, thanks very much for your thoughts. Alfred Schipke, Director of the East Asian Institute at NUS.